Today, we're going to be going through, so hold on a moment. I suppose I will pause and, well, I'll introduce myself in a couple of slides. Today, we're going to be talking about changing your fiscal year in Infor SX.e or CSD, some points for consideration. I will talk just a moment about NSA, then about myself, and then I'm going to dive right into the content. So NSA, for those of you who are not already familiar with us, was founded in 1984, and we're known for our reputation with the user community is for our personal commitment to the success of our clients. We have a very large team, I think 15 maybe now, of senior business consultants who have a minimum of 15 years on either SXE or when it came along CSD and TWL. And our primary focus is on distribution, right? Wholesale distribution, and specifically within CSD. We also have NSA Plus, which are services that are what you would call edge products, like credit card application, tax application, delivery application, data mining, that sort of thing to enhance your ERP solution. A bit about myself. My name is Kathy Lundquist. I am the Vice President of Professional Services for NSA. And my primary focus is in the financial area, but an awful lot with mergers and acquisitions is a space that I play in quite a bit. Mergers and acquisitions, audit compliance, separation of duties, those sorts of things. Something that comes up a lot. We used to do, maybe I'm going to say, one of these every 2 years. And then the frequency started to pick up. And this year, I believe NSA is working on, oh gosh, I believe we've done more than a half dozen fiscal year changes this year. So I'd like to talk through a few things about fiscal year change. So first is the definition. So a lot of people, don't even know, and if they're in the accounting world, they know exactly what the fiscal year is. That is the year that you use for your accounting records. The most common is calendar year. And that is, our fiscal year begins in January and ends in December. The next most common is where it is still something based on a calendar year, but it doesn't necessarily start in January. So this could be, for example, we might see your fiscal year begins in April and it ends in March. And even though it is not a strict calendar, it is still, what we would call a typical 12-month year. There's also one that is called, you may have heard of, called 445. And that is where the year, your fiscal year, is divided into 13-week quarters, each of them containing 2 4-week months and 1 5-week month. This is extremely common in the retail world. So if you have not heard of it before, it's typically just referred to as a 445 or a 445 calendar. And it means that in general, the end of the week and the end of the month fall on Sunday. And it's again 4-week, 5-week. And that usually means that no 2 years are going to have the exact same period end date. For people who are not familiar with it, I would say that probably the 445 is for them the most confusing until they get used to it. So what are the reasons that that clients change their fiscal year? By far, the most common is in an environment of mergers and acquisitions. Either you're acquiring or you're going to be acquired. And sometimes the fiscal year does not line up to be the same. In fact, it's quite becoming more and more common for the fiscal year to not be the same. Now, this is not the exercise where there's more than one company operating within CSD, operating on 2 different fiscal years. They can each be in their own company within CSD. This is where you have to bring them together or bring information into alignment so that you are on the same fiscal year. Mergers and acquisitions is the biggest. The next one could be consolidating companies. Maybe you've got 3, 4, 5 companies within CSD, all in the same currency, all in the same country that you want to combine into collapse, basically. So sometimes customers come to us saying we want all of these to be in the same company, fully divisionalized with, walls of separation between the businesses, but we don't want to be operating in multiple companies anymore. But we've got a challenge because a couple of them are in different fiscal years. So what do we do about that? So consolidating companies is one. Aligning with business or industry cycles. We see this sometimes in the construction world where you're trying to align your fiscal year to line up more with the industry in which you serve. It could be your parent company requirements, your parent company, whether maybe it's not a current merger or acquisition, but the decision has been made that everybody's going to be rowing in the same financial cadence for what your requirements are, or it could be for tax implications. Um, these may be well planned into the future. Sometimes we get a phone call saying, hey, we're considering changing our fiscal year at the end of this year to line up with calendar, and we get that call 8 months in advance. That is not the most common case. Most of the time, we hear from these after there's been an acquisition or if there's an acquisition in the works, um, and there's little to no notice. So these come up as what I would call oh my gosh, we need to get this and we need to get this done now. We don't know who else is out there to do this. And obviously, that's why we're doing this webinar. So for planning purposes, again, just talking in general, this is primarily an accounting task. There should be little to no impact to your operations team. The only time that we see operations teams being impacted by this, quite frankly, is for things like, well, let's say if you're changing from calendar to 445, and people are used to thinking that the end of the month is the 30th or the 31st, and now you're telling them it is going to be on the 28th or the 7th. And people get a little confused until they get used to the new calendar. Um, or their commissions are based on whatever goals they hit for the year, and then the question becomes which year. Or a bonus package is based on hitting goals for a year, and then the question becomes which year, especially when you're doing these changes midstream, which is, I will tell you, almost always the case. Is this a day one requirement? That is something that I'm going to say that most accounting teams, it's one of their first questions to us. And the answer to that is absolutely not. It is not a day one requirement. So let's say that you're in the midst of being acquired. And again, this is being recorded. So there are people who today don't know they're in the midst of being acquired, but they may find out in a year that they are. Or you're in the midst of acquiring somebody and they're in a different year. Because the changes are generally to historical data, this can be done pretty much at any time. Usually you get a grace period from the acquirer saying, and we need this change to happen within 30 days of the acquisition, or 15 days, or by, before the end of the year, something like that. So it is not hey, we're being acquired and we're being acquired next Monday. Oh my gosh, we need to get this change in place. That is not, it doesn't work like that. The acquirers never have that as a requirement. At least I'm going to say in the 20 plus years I've been doing this, it's never been a requirement. But there are things that need to be put in place for day one, that will need to be done for day one. And that's why we want to at least get some thought to planning out there for people. So some of the things that you need to be aware of and keep in mind, are there SOX or audit testing and documentation requirements? Even if a company is not publicly held, they could be, enterprise size companies are following SOX in some form or another. There may be audit requirements. You always want to make sure that you're thinking through in advance. What do we do for documentation? How do we prove out? You'd never make the change in a production environment, right? You make the change in a test environment after getting approval that the test scripts and the changes that you're thinking of making make sense. You usually run them by audit in advance to say, will this satisfy your requirements? Usually, audit is looking for what I consider to be mostly reasonable information. They're looking for your trial balances, your balance sheet accounts, your subsidiary accounts, your control accounts, making sure that there's good documentation and also capturing good artifacts for before and after. So capturing information before the change and capturing information after the change. Another question that we ask and get asked a lot about is historical record retention. So sometimes when these changes are just being made within your own environment and not because of an acquisition, then generally speaking, you don't need what we would call a gold copy. A gold copy is usually a copy of the as is before the change to be retained and not touched, because it's there for like old company. It's the records as they were. Some auditors require it, some do not. There are no two of these projects that we do that are the same. The requirements vary widely based on the requirements, the size, the scope, the public obligations. But in general, we call the gold copy a copy of the before state. Let's say that acquisition happens or the change happens at 12:01, midnight 01. We capture a copy before that, and that is just life as it was. We also sometimes get what we call a bronze copy. The gold copy, let's say that is the one that nobody touches. It's just out there for posterity. It's frozen in time. Just a separate before snapshot. The bronze copy is before the change snapshot that may be done for transition accounting. So closing out the old company obligations or the old ownership obligations in a bronze copy that only accounting has access to. For a new company or going forward, we generally don't start a new company in CSD. We generally take these other copies and they're copied out there, but then life just continues on for the users, the day after acquisition. As far as there's concerned, there's no changes because that historical information has been captured. The other question that we bring to people making these changes are, and again, I don't expect anybody on this call to be asking these questions because it's too deep of a dive, but what's the definition of your stub period? Do you need data for comparative financial statements? Um, so, if this change is being made, is it as of day one, everything is new and you don't need to have comparative statements? Or is it no, even though it's day one, I want to be able to compare this year to last year? So there's a lot of questions to be answered, but these are just some things for you to start thinking through in terms of making a change. Next up, I want to bring up, okay, what fields are impacted? So a lot of times people will go to the IT team and say, we just need to flip a switch, just change our fiscal year. So I'm going to show you within the system what that looks like. So I'm in CSD, and within the administrator options on the fiscal year is something that says, what's your current fiscal year? Is it a 13 period? If it's unchecked, it's not. If it's a 12 period fiscal year, when does it begin? Does it begin in January? Does it begin in April? If it's a 13 period calendar, what are the dates? Well, sometimes people think it's as simple as just coming in here and going, oh, now we're this, and the year starts here, and that's it. It is not as simple as that. I wish that it was. We wouldn't be having this webinar. All that does is takes care of stamping the information on records from now and ahead. It does nothing to the historical data, which will cause corruption within the system for when you're trying to say, okay, I want to report on period one. Well, in CSD, you stamped period one on something that's completely different than what your definition of period one is going forward. So the exercise is, first off, understand that it's not just flip that switch, because that does not flush back to data that's already been created. It only impacts data from when you've changed it going forward, but no backwards impact, which is a problem when you're running when you need data that is accurate coming from the system. So that's where the fiscal year is set up, but you don't just go in there and change it. You need to understand what records is the fiscal year stamped on within CSD or SX.e. There are many files in CSD, many files, many fields, but very few of them retain what we would call the fiscal year. So we like people to know upfront what those are, so that they can make an educated decision about which of them they want changed. And I will tell you again, no two companies approach this the same. So this is not a cookie cutter approach. It's not a cookie cutter project. The file list that most users think of is the general ledger, right? Your general ledger transactions, your period balances, budgets, and system journals. So within CSD, I'll refer to SX.e CSD just to keep it simple as just CSD. Within CSD, these are the ones that people say, I want to change my general ledger. Okay, so do you have budgets stored in CSD? If so, we need to take a look at those. The system journals, when you engage with us and we talk about your project, we can explain what that means. So general ledger transactions and period balances, that one is obvious. This is what's less obvious. These fields are also impacted by the fiscal year. So accounts payable transactions and accounts receivable transactions. So I'll talk about the transactions first. When a transaction is created that creates accounts payable or accounts receivable, the fiscal period is stamped on those records at the time they are created. So what does that impact? This does not change the transactions. If you go to run a report, APEJ or APRA, I like to spell it out specifically so you do not think it's every report in the system for AP. So if you go to run a report in AP, your AP aging won't be changed. Your AP cash requirements report not impacted. Those aren't run based on fiscal period. We are only concerned about reports that actually use the fiscal period or could use the fiscal period when you run them. So I'll show you what that looks like. I'm going to go into APRA, accounts payable transaction activity, new one time, skip past this. I could look at it based on this, but this is the field that I care about. If you're running the APRA by period, if you're running the AP journal print by period, the period that it uses is the fiscal period. So that's what we mean by reports that are impacted. So accounts payable and accounts receivable, not all reports. So again, doesn't impact your aging, doesn't impact your cash requirements, but the fiscal period is stamped on the record. And for those reports that you run by fiscal period, it uses the fiscal period that was in place at the time the transaction occurred. Three other fields or three other files that people are not thinking about, but that are impacted based on your fiscal year is your vendor year-to-date fields, your customer year-to-date fields, and your inventory year-to-date fields. So so I'll show you what that looks like. I'll go in first into my vendor. So I'm on a vendor inquiry. And down here at the bottom on the general tab, for those of you that use CSD, and if you use character or graphical, you'll still see the same things on the vendor inquiry. Year-to-date balances and previous year balances. So these year-to-date balances are for this vendor, the invoices year-to-date, the payments that you've issued year-to-date, returns, rebates, discounts taken, and those are accumulated based on those transactions occurring this year. When you run what we call the year-end process or for accounts payable, it will move these from the this year bucket into the previous year bucket. When you go through a fiscal year change, one of the questions you'll want to find out from your team is, are you using these fields? And I will tell you that this one causes people to go back and forth, and I don't know, 60% of the time they ask us to change these so that they're in alignment. On the customer inquiry, same thing. Hold on, I'm going to close out the administrator options. On the customer inquiry, same thing. So what is the year-to-date balances for costs, sales, returns, rebates, service charges? And then when you run the AR year end, those move from the current year into the prior year. Do people use those in your environment? And if so, do you want those to be aligned with the new fiscal year? Then the last of the ones that's year to date is our inventory. So within inventory, as we go through the year issues, which is where we are selling or issuing out the inventory, receiving inventory, returns in, returns out, there is no year to date for prior year, only for this year. Are these accumulators going to be based on just, okay, we're not worried about that, we don't use it very much, or you do, people refer to them, whether or not these need to be changed to be put in alignment with the new fiscal year? Um, I'm going to pause on that. Any questions so far? If you have any questions, feel free to put them in the chat. For now, I'm going to keep going. So besides the fact that those fields are impacted, here's another one that people are not thinking about, but they should. How do you store your sales history? So within CSD and or SX.e, the sales history is stored whenever you run invoice processing. It populates files in the background in the sales manager module. When you get ready to run reports, it depends what reports you run, which file the system is using. So for example, the most popular sales management report that is run from the sales manager module is SMRS, the sales manager report. That does not rely on these tables. That looks specifically at the order and the order header and the order lines. For all these other for all the other sales history reports, so this is not the SMRS, this is the sales history reports, the data is stored based on the fiscal period and the year to date based on whatever your current year is. Does that need to be, is it being used by your company, and does it need to be changed to be in alignment with the new fiscal year? Next up, report schedules and stored reports. So this is not something that we need to change. This is something that you need to be aware of. So in system tables, SASTT, you set up report schedules. And you set them up, for example, to be run based on end of the month, first of the month, end of the quarter, end of the year, every Friday, every Sunday, whatever those frequencies are. And then though for the stored jobs, the ones that you have run automatically for repetition, you have them on a schedule based on whatever those report schedules were that you set up in the system tables. So again, for the first of the month, for the end of the month, and so on. Depending on what your fiscal year change is. So if you're going from one type of calendar month to another type of calendar month, that there should be very little impact on that, but there would be impact based on what is your end of quarter, end of year. If you're going from a 12 period to a 13 period, or from a calendar to a retail or a 445, this will have impact. You'll have to think through things like, okay, my monthly reports, are those going to be based on fiscal, or are they going to be based on calendar? And for some, it's going to depend. You may have one answer for your customer statements and another answer for your usage reports. So this is one that we pause, take a look at the ones that are running on a basis that is different than your new fiscal definition and say, do those need to change? Again, this one impacts mostly the IT team for reviewing the stored reports that are out there. And when they're reviewing the stored reports that are already set up, they're taking a look at two different things. The first is, what's the frequency and timing that the end of month reports are set up on? And then the second is, for the reports that are preset, and I'm using an example here to show what does that look like. For preset reports, this is an example of the roll balances. So if you're getting ready to age your accounts receivable and you post service charges and you have this run usually at the end of the month, what is that definition of the end of the month with a new month change? And that so these could be set up to run at a specific frequency with specific dates filled in. You will want to make sure that those are reviewed. So here's an example of the SASTT with the for report schedules. It's like first of the month. Okay, does that become first of the month, or do you want it to be based on the period? Or last, is it based on end of a month, as in a calendar, or end of the period? And so on. So this is just to give you an example of some of the frequencies that we're not concerned about the everyday. Those are obvious and normal, or the hourly, or the Monday through Friday. Those are fine. But the ones that could be based on whatever your definition of a month or a period may be, need to be examined. Other considerations as you're going through this. could be modifications. So what I just walked you through was the standard system reports, the standard system files. Do you have modifications or customizations that may be impacted? In addition, third-party applications or interfaces that may be impacted. Not that update, let's say they update the general ledger, but based on fiscal period. Right, that's the only part that we're really trying to focus on is what is the definition of a fiscal period, and does it have impact on third-party applications or interfaces? An external data warehouse. So do you have a data warehouse or a financial reporting package or something like that that has stored information based on the period where you will need to give consideration to the fact that the period definition is changing? External reporting and dashboards for sales, for analytics, for the FP&A team that need to be thought through for what impact may be there because of the change of a fiscal period. A simple example might be F9. So for those that use F9 or OneStream for their financial reporting, and they're storing that data in their external database, what is stored? Do you need to change it? Do you need to clone it and have one that's from the what was and one that's for the go forward? Do you need to change any of your mapping, dates mapping on the basis of it? And then other things that are that people should be thinking about when the fiscal year changes. Is there any impact to the basis for commissions, rebates, bonuses, report filing, pricing updates? These are not SX.e or CSD records to change. These are just some of the things to think through to say, do we need to give consideration to this is based on this frequency or this definition of a period or this definition of a year, and we need to go back and take a look at anything as far as contractual obligations or commitments that may be impacted by a change of fiscal year. And then for next steps, so you may not be going through this today, but you may find out that this is in the works. We recommend, if you're looking for a partner to help you, we're more than happy to be of that help. Reach out to whoever your service partner is to assist you with this. Because there's quite a bit of consideration and planning to go through. And again, if you're aware of something in the works, it's good to engage early. That doesn't necessarily mean that a project has to start right away, but it's good to engage early so that adequate planning can be done. If you think that something like this may be in the works, we'd be happy to talk to you and walk through what your options may be for consideration. And if you have additional questions on what those next steps might be, feel free to reach out. My contact information is there. The NSA contact information is there. Before we end, if anybody's got a quick question, I'm happy to take it. Otherwise, I will stop the recording. All right, everyone. Hope you found this extremely helpful or thought-provoking, and looking forward to hearing from a few of you in the future. Bye now.